What's going on, everybody? Welcome back to another video of price action trading, and we are at the daily chart. And today we had this tiny little doji, and it just shows how little volatility we had today. Actually, a few days ago the bars are fairly big and the volatility is fairly decent, but the last 2 days these two little dojis just shows how volatility has slowed down a lot. So let's take a look how prices are looking in a much smaller time frame. This is the price action we had for the day. And we started with a downtrend with a break and a new low. Price action rules work: uptrend, break, and a 2 legs to new high. And once you have a break and a new high of the current working trend line, there's most likely going to be a correction or straight up reversal. The prices ignore correction phase and we wait straight into a reversal. And this was the first trade that I saw today, because this is the new high and we can treat it like pullback first entry, pullback second entry. Prices spike through EMA big time, pull back. Now this technically is not first entry because we didn't tick one tick above this bullish bar. But if you go on a little bit smaller time frame, you can actually see that this was a legit first entry. So this is how I was treating it today: pullback first entry, pullback second entry. But more importantly, we broke one tick above this bar, instantly traded back lower. This is a nice big bearish reversal bar, and the EMA is holding at this point. And the prices quite ignored the EMA. We went through it. We had a little bit of resistance, but we went through it mostly. So this was the first trade, and we ended up with a spike and a channel. And then prices kind of bottomed out here, and you know, there was this little bullish correction working higher. But at this point you don't really want to go short because we are still inside of this trend line, but you don't want to go long either because now we're in a downtrend. And when I see this market structure, I was actually trying to find some trend line like this. And this is what I was playing because the prices turned down lower here. So this was the indicator I was looking for, this trend line. But we didn't even retest, we didn't even attempt to retest a new high here. So this is why I was really strongly believing this trend line. But this is where I had my first loser today, because even though the trade would have worked on this chart, I actually have more than one broker and I have, you know, different platforms I'm trading. So the signal bar on the different platform was actually much bigger, and I entered much lower, and unfortunately it wasn't enough for my scalp, so I got stopped out on this big bullish bar. But this just shows you how, you know, let me step back a little bit, because once this big bullish bar, you know, was completed, I knew we are now going to trading range, because the downtrend, you know, wasn't in play. The prices are starting to be swinging up and down through EMA, and market really doesn't know where to go. You know, we're not really selling off, we're not really rallying up. So at this point, once we started working up and down, and my analysis of the downtrend was wrong, this is where I was starting to think we might be in a trading range, because there is support forming here and there is some major resistance starting to form here. At this point, with this double top, the resistance is much more obvious now. Normally I wouldn't mark this trade, probably because it is just a first entry. We have a new high here, prices are working lower, and this is just a first attempt by the bulls to go higher. It is a third bounce off the trend line. The trend line set up right here with these few bounces here, and third bounce confirmed the trend line. But more importantly, this is a small little trending range, small little consolidation, and prices broke above this and pulled back into the area of trading range. So this is a breakout pullback pattern. So this was the reason why I like the breakout pullback pattern combined with the trend line working higher. So this is, even though it is just the first entry, the breakout pullback and the trend line holding is a good enough reason for us to go long here. And prices kind of went higher, and we have a failed break higher, and of course 9 out of 10 breakouts will fail. The only reason why I didn't really like it that much today, because we are still inside of this channel working higher, and I was kind of afraid we might chop it for a few minutes and then turn back. So I was, you know, maybe too cautious. I probably should have taken this trade because it is a failed break higher. But notice here, you have a new high, prices are working lower, pullback, first entry, pullback, second entry. So this is a failed second entry long setup, 2 attempts by the bulls to go higher. The resistance is now holding, but the signal bar is very big and we are too close to this low. But more importantly, we are waiting for a new high of this trend channel line working higher. So I really didn't like taking this trade, even though this trade would have worked. It doesn't matter that it would have worked, because we have to realize that the signal bar is way too big and you're so close to these lows, and we are waiting for a new high of this channel. So, you know, we would be taking some risk here. But as you can see, it still would have worked. The failed second entry long is a good setup and the resistance is now holding. Nevertheless, I think it's much better to wait and let the prices, you know, go through their flow. And this was the much better setup. We have a double top at this point, another failed break higher with a double top. So this is much, you know, higher probability than this failed break higher at this point, because we now made a double top. And it is actually, you know, for a lot of people that are just starting out, this is very counterintuitive to take, because look at this big bullish leg working higher, and we have this uptrend working higher as well. So this is very counterintuitive to take, because right now the market has proven we are working higher. But this is why you have to follow the rules and why we have those rules in place. We have to trust this. So, but right here, this lower high, this was much more beginner friendly setup, because if you're uncomfortable with, you know, picking the tops or picking the bottoms, just wait for the lower highs or lower lows. Because notice the new high, pullback, first entry, prices pull back, and the resistance was retested and held, but more importantly EMA held as well. So we kind of pull back into the trading range, and the resistance is holding, EMA is holding. It is a failed second entry long. It is a lower high of this failed break higher. So this is much higher probability setup if you are uncomfortable with picking the top right here. But you know, this trade was a still very good trade, because most breakouts will fail, and we just kind of the volatility is starting to pick up a little bit. We broke lower, pulled back, retested the support, now acting as a resistance, and we made 2 new legs to low side. But I'm gonna make it very quick today, because, you know, there's really not much that happened. And I didn't really know what was happening right here, because this is kind of a no man's land right here. And I'm going to show something, because this is what I've been seeing lately. As you can see, once again, we bounced from the 50% line. This 6180 and 50% line are actually very reliable, you know. Now, do I trade it? No, but there's definitely, I get a lot of people that that I talk to that actually use Fibonacci's, and they're trying to convince me that there's some value to them. You know, I'm still not sold on it that much, but I'm definitely starting to see that there is some validity to this, especially if you got such a clear leg up like this. You can expect some bounce in the middle with the Fibonacci, but you know, let's not get sidetracked. So I'm gonna wrap it up, and hopefully you had a good day today. Bye guys.